GM is announcing earnings tomorrow before the market opens. And before they do, I want to go through exactly what I'm looking for from the company, what we should look for as far as cash flow goes, buybacks, that's going to be a big topic. And then also cruise is going to be one of those topics where we know that the company is getting back on the roads with safety drivers. But this was long-term. One of the things I was really excited about General Motors stock is the core stock is really cheap, trading at 5 or 6 times earnings. But there's upside with Cruise. But obviously after the incident that happened in October 2023, that was put on hold. So what are we going to learn about that? So I want to dig through some of the numbers and give a baseline based on what management said from fourth quarter results and guidance for 2024. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start this off with a couple of charts that just show the momentum that General Motors has as a business. The first thing I'm going to show is revenue that is in the light blue column and free cash flow that is in dark blue. And a couple of things I want you to note here is just how consistent things are. Yes, revenue was down in 2020 and 2021, but that really recovered in 2023. And what we saw was strong demand for particularly trucks and SUVs. GM has also added some lower cost vehicles like the Chevy Trax that is apparently doing extremely well. So we'll see how demand is for a lot of their products, but I would expect revenue to be pretty consistent and free cash flow should be consistent as well. I'll get to some of their free cash flow guidance, but this is really going to be the story for General Motors is this just a consistent cash flow machine? We don't necessarily expect this to be a growth company like a competitor like Tesla has promised to be. By the way, they're not growing revenue right now. We'll likely report a decline in revenue for the first quarter. So is General Motors able to take market share and continue selling these high-priced trucks and SUVs? That's, I think, the first question that we need to look at. And then what do their margins look at? Because margins ultimately are going to drive the free cash flow number. So those are going to be really the headline numbers, and management's going to talk about a lot of the details behind it. But what we want to see as investors, I think right now, is positive free cash flow, because if that continues, management can continue to buy back shares at a price to earnings multiple of 5.8 right now. The next chart I want to show is buybacks and the number of shares outstanding. The light blue column is the amount of buybacks that GM has executed on a trailing 12-month basis. All of these are trailing numbers. So $11.1 billion in stock bought back in 2023. We're not going to see that massive number continue in 2024, at least not yet. There was a huge buyback the company did late in November, but that's why you're seeing the share count drop as precipitously as you are. And actually, it should be even lower than this because this is an average diluted weighted shares outstanding, meaning what's the average throughout the quarter, not what's the number at the end of the quarter. At the end of the quarter, it was closer to 1.2 billion. So we will see this dark blue line actually sharply fall in the first quarter because their average weighted shares outstanding for the first quarter is going to be under 1.2 billion. So I want to see how aggressive management is using the cash that they are generating to just simply buy back shares. That's going to be a big piece of the story for General Motors, and one of the reasons that I own the stock. If you can buy a company that's generating cash flow year after year after year and just buys back those shares at 5-6 times earnings, that's a phenomenal way to generate a return as an investor. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. To put some context into what to expect from a financial perspective, this was calendar year 2024 guidance. So we're going to not only want to judge first quarter results based on progress towards this guidance, but also does management change this guidance for the year? First of all, $12 to $14 billion in EBIT adjusted is what they're expecting, and a 8% to 10% margin. This is probably the one number that I'm going to watch most closely is, has GM had to discount their vehicles? Well, because we know that electric vehicles are going through this massive discounting phase. Are we seeing the same thing in traditional vehicles? One of the things to think about with GM is a lot of the margin and the price increase that took place during the pandemic was not actually done by GM. It was actually done by dealers. So what we may see is the overall price of vehicles start to come down, but that doesn't necessarily impact the revenue that GM is generating per vehicle. Whereas a company like Tesla is generating all of that revenue because they own their own dealerships. So when prices come down at the dealership level, Tesla takes that hit. This one is going to be a little bit different for GM and their dealer relationships. The other thing is $8 to $10 billion in auto free cash flow. That's going to be probably the number I'm going to watch most closely is, are they on progress to that, and do they guide to the same number for during their first quarter conference call? Now, when it comes to management's commentary in the quarter, the two things that I'm going to watch is the investment in electric vehicles. They put off a lot of that, not only investment, but also introducing new vehicles. Some of those are starting to come to the market, in particular the electric Silverado, which is going to start at a very high price point, around $95,000. But I think it's also a really compelling vehicle. So is there a market for those kind of vehicles, and when are lower cost vehicles coming? We know that the Equinox is on the way. That's supposedly going to be one of the most affordable vehicles on the electric side available in the market. So we need to know more about that investment, not only how many dollars are being invested, but can they generate a profit on sales at those lower price points? I think that's ultimately going to be a big question. Not necessarily because electric vehicles are going to drive their financials over the next year or two or even 5 years, but it more lays the groundwork is a company like Tesla going to be disruptive to General Motors, or are they going to be able to make that transition over the next 10 or 20 years? That's more what I'm looking at. I don't need General Motors to be an EV company tomorrow. If you want exposure to electric vehicles, there are plenty of options to do that. That's a story for a different day. But are they going to be able to slowly make that transition? The other thing that I'm probably more concerned about is, what's the future of Cruise? What is the vision for that company? We found out after the fourth quarter call, we knew that the vehicles had been pulled from roads. We knew that the CEO and founder had left. So there's a lot of organizational changes that have happened. We got safety reports after that. There's been a whole restructuring and rethinking of the business, but we haven't gotten a lot of details. Cruise has only released a few tweets, one statement recently that said they were going to be returning to roads, at least on a small scale. But what is the future of that business? Because I think ultimately that could be a really disruptive business. But management said that they were going to pull back on spending at Cruise by about $1 billion this year. That's a massive amount of pullback in spending. A lot of that can be pulled back on plans to scale the business. So that wouldn't be surprising, but I want to see that there's still investment in the infrastructure, in building out the technology, in building out custom vehicles like the Cruise Origin, which was also delayed. I want to at least see that there is a vision there for an autonomous driving future, because if it isn't, this is a lot less of an asymmetric opportunity. This is more of a value stock. And do you want to own an automaker long-term? That's maybe less appealing than owning an automaker as kind of your baseline, with the upside if Cruise is successful. So that's the way that I'm thinking about this quarterly result, is I want to see the numbers improve or at least stay steady, and then have that upside in Cruise, or at least see that there's going to be an investment and a vision there. But we'll see tomorrow when results are announced. What are you expecting from GM? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.